All right, so welcome you all again. If you have any question to ask, anything? All right. So, to have a quick recapitulation of the story, yesterday we're talking about, so far we have discussed that what is the stock market, we have understood that what are various debt instruments, and in the debt instruments, how the money market, capital market, and the heads and the features of them. Then we understood that what exactly when we say investment from the equity point of view, what exactly is needed, what is the red herring prospectus, why it was required, how a company can seek investment from the investors. We have understood that how the IPOs are issued, what are follow-up IPOs, what are right issues, sweat equities, ESOPs. We have understood what is penny share, share buyback, split shares. We have also understood that what are these two major depository participants called CSDL and what we call NDSL. And I have also told you that why they are significant, what is their role, what is demat account, how the investors can be, what are qualified investors or what you call qualified institutional buyers, who are anchor investors, what is when we say non-institutional investors, retail investors, bull investors, bear investors. We have also understood that when we talk about investment, what it means when we say mutual fund, SIP. I told you that mutual fund is where money is being kept at one place, and then a professional is investing on your behalf. Obviously it is having that market risks, but then even it's much better a deliberation, because now someone expert is going to do that. SIP, I told you, when you're giving money on periodic intervals. Then we also understood that what are small cases where we have relatively more transparency. What is index fund? Index fund is something where it is predetermined that in which index they are going to invest. Then what is real estate infrastructure for trust? Then what is investment infrastructure trust? Then what is ETF? Why this ETF became one of the favorite choices of the investors, particularly those who want to invest in the government public sector enterprises. We have Bharat 22, what is that, and how it came up. Then we understood that what are various types of stock exchanges, how the idea of stock exchange in India way back in 1875, what we call Bombay Stock Exchange, how it got recognized in 1957 by the government of India. 1986 we got S&P, that rating company. In fact, you might have read, that's a bad news if you're following today's newspaper, that Fitch has continued with the negative outlook. Triple B is what they're continuing. We were expecting that, like Moody, even Fitch might upgrade our rating a bit, but they maintain the status quo. In today's newspaper, almost all newspaper might have talked about it. So if you see that, I told you that how exactly when we talk about S&P supporting this Bombay Stock Exchange, we are the 7th largest. What is Sensex? How it is being calculated? What was that index and how Deepak Mohani called it Sensex? Then we also understood that how it gone digital from 1995 when we got what is called Bolt, on which it is working. We have more than 5,000 companies listed there. Then I told you what is NSE, how it came in 1992, how the NSE got its sensitive index called Nifty. And then we got what is called Nifty Next 50 or Nifty Junior. So that's our Nifty 50 or Nifty Next 50. We have more than 2,000 companies registered on what is called National Stock Exchange. Then we understood what is MCX, Multi-Commodity Exchange, which deals with non-agricultural things. In that I told you that we got precious metal, base metal and energy. Then how we got what is called this NCDEX, that is Commodity and Derivative Exchange, primarily for agriculture. How they got their sensitive index called AgriDex, which consists of 10 crops, both from Kharif and Rabi. And then we have talked about what is MCX SX, which deals with the currency and the future options. And then we talked about that how we got what is called this new concept of BEAM, that is Bombay Stock Exchange for agriculture marketing. Even I also told you that we are working on what is called social stock exchange. Once it has been fully functional, obviously it will create a lot of opportunity for those who want to invest in social sector, or what you can call as impact investors. This we have done. Yes, Vaibhav is saying that means you have read about the Fitch Group report, and overall the report continued with the status quo. They are of the opinion that it's too early. In fact, you might have read in Indian Express or in Hindu, there were news might be brief. Economics Times has given a detailed information, and one of the statement was also given by the representative of the Fitch Group. They say it's too early, because they still believe India is not going to have that what is called V-shaped recovery or W-shaped recovery as we are anticipating. So they still believe it's going to be mambo jumbo. We will be having what is called a little fluctuating pattern for at least 1 or 2 years. So here a question is coming, sir, what extent this argument is right that whenever government authorizes a market or any private sector, people trust increase on them, otherwise investment is not coming to that extent? Yes, it is very right, because the moment government provides support, government may provide support in 2 ways. Either it recognize it. The moment government is recognizing it, now you know that this thing is supported by a government which is not going to default. Let's say I support something, I may default, but the governments are not going to default. That will be very highly unlikely that a government defaults. So if the government is not going to default, needless to say, if government is supporting it, that would be a good idea. In fact, maybe you might have read here and there in bits and pieces that we have, that's a very good thing. In COVID, it was very useful, thanks to Dr. Manmohan Singh, who thought that way way back in 2011-12. We have a trust of the government called NCGTC. Next time when you are reading this term, now it should ring a bell to you. NCGTC, that is actually a trust by the government. This trust makes sure, so National Guarantee Trust Company Limited, this NCGTC makes sure that government whatsoever is saying, and if taking guarantee of any loan. Earlier government was giving special notification that this company will take the guarantee. Now we have a dedicated company that takes guarantee of Mudra, that takes guarantee of all stand-up loans, that take guarantee. You might have heard of the Mudra Bank. Mudra Bank, so the moment government is becoming a guarantor, you know now it's going to be almost default-free and irrevocable. So keeping this in mind, the trust increases, and that's the merit why when government is supporting, definitely it attracts more investment. It does. That's what the point is. So, but government argued in Ecoss survey 2000 that these ratings are not affected any investment for India, and also alleged on the rating. So what extent this rating influences investment in India? Shubham, our chief economic advisor had said that this is not the time for S&P Standards and Poor to be taken seriously. I think this is slightly the wrong interpretation. If you think that he was not saying we don't give a damn. That was not the outlook. He was saying, as of now, S&P is not our priority. Our priority is very clear. In fact, economic survey, I have told you already, economic survey is a masterpiece document. One should be reading it, not to mug it up. Don't try to, while reading economic survey, particularly the first booklet, don't try to mug up the facts. Just look at it. Read it like a novel. You read it and then forget it, and then when required, that interpretation will come in your mind. So yes, he was very clear that as of now we are not giving priority to S&P. One thing. Second, he said S&P alone or credit rating alone cannot be the criteria. Cannot be the criteria. There are other things also, that how other markets are responding, what has been the trend in the destination country where the investors want to go. Like even today, if I could tell you, in the morning I was just cross-checking. That's my bread and butter, so I do that. At certain intervals, I do cross-check the facts and figures. So if I could tell you today, Ministry of Finance has updated that our FII flow has slightly increased. I'm talking about FII flow. That has slightly increased. That means investors are coming to India. The reasons are several. One reason is that, China is going through a tough time. Maybe this 3 hours drilling between Joe Biden and Xi Jinping might help China now. It looks like, because somehow that meeting was very fruitful. But despite that, China, these days investors do not want to go China. That's the point. So what they're left with in Asia, one is India, another is to some extent Vietnam. I think Vietnam we are taking lightly. And you will see in next few years, Vietnam is the dark horse of the Asia, which has been slightly overlooked. Vietnam could be potential competitor in times to come because of the connectivity they have, and you can say that the way they are working on R&D. So if you see, technically speaking, Vietnam, India, these are the destinations where they can go. Malaysia to some extent, they can go there. So as investors are having what is called India on the topmost priority, is one of the reasons why investment is coming. So he was saying, that's a wonderful chapter to read. I'm sure that you have read that chapter, that's why you made this statement. In that chapter he says very rightly that S&P poor or standards and poor rating is something which should not be considered as what is called the hallmark of something. It is something which is a reference point. You cannot consider it as a yardstick that if it is down, that means investment will not come. It's not a necessary condition, because globally if you see, investors, what China has done in the last 1 year, that is something which is definitely making foreign investors aversive. Like, let me give you a quick example, though might be a little digression, and you might have heard of this crisis called Evergrande crisis. Evergrande is a big company of China in the real estate. What happened? They got liquidity problem, that they don't have money now to give their payments. Now Jinping is coming with a systematic inclusion plan for Evergrande. They are saying we will buy their properties, we will make them systematically bankrupt, making sure that our investment is not at stake, and those who are foreign investors in Evergrande, they are left behind. This is not the first time Jinping did it. If you see in past 1 year, this thing has been very frequent. Keeping this in mind, investors are little now aversive. So they are desperately thinking of the new markets. One of the favorite destination is becoming India. That's why he was saying, and that was, his statement was absolutely right. But he was very clear on one thing, that our priorities are topmost. We are very clear on our priorities, and our priority is saving people. In fact, if I could tell you, maybe the others will be a little interested then. I'm digressing a bit, but that digression is not out of context. I'm taking you to something. So can you on this projector? I would like to show you something from economic survey, so that others also understand why this document is good and at least should be referred. I hope you can see that. Okay, fine. You can see that, I hope you're knowing this lady, our finance minister, but I would like to know you, this fellow. He is our chief economic advisor, KB Subramanian. Can you figure him out? Look, this fellow, KB Subramanian. In fact, wonderful, don't look at his age, don't go, looks are deceptive. Yes, he had been there in Camrys, he have, worked with what is called, big firms, including RBI. So a man with fine blend of academics and, professionalism both, or you can say practical experience. I would like to show you this year's economic survey. Just one thing. In fact, now that we got digital, so even I won't advise that go and buy it. Just go digital. That's a good idea. I think we can zoom it a bit. Can you see this cover page? Just the cover page. Forget about other things. I'm really not. No issues. I think you can see it. Is it visible, sir? All right. Watch this cover page carefully. What it says to you. Did you notice one thing? And this cover page says a lot. A lot. To that extent, so that even this cover page was capable of giving you one question in your mains if you have taken it seriously. Look at the photograph. There is a balance, and balance is on the coronavirus. Did you see that? The coronavirus. On the left-hand side, we had risks, and the priority was very clear. The first priority was, if you could see, was clearly saying lives. Lives. Second was health. Second was health. Can you, I hope it's visible. No. All right. So if you see very carefully this cover page, what was the challenge? Challenge was in form of risks. Risk was life. And we were very clear that saving life is our topmost priority. Second was health. Third was economy. In fact, then there were smaller things like lockdowns and all. Very clearly, if you see the weight given to that, our first and topmost priority, that's why we got that stringent lockdown. We were very clear saving life is our topmost priority. We don't want to go like other countries. Then second was health of the people, and the third was the economy. So our priority was set. If you watch carefully, the Mother India has been shown in the map. Could you see that? Mother India's map. And that Mother India is being protected by the corona warriors. There's a doctor, there's a supporting staff, there's a policeman, and there are the janitors out there. So they are helping on saving Mother India, making a safety circle. Could you see that? And this risk has been converted into opportunity. In the opportunity, the first thing we have done, what you can see here is in terms of, if you see in terms of opportunity, we were talking about that how we got the opportunity of reforms, Atmanirbhar Bharat. Look, we were claiming vaccination is something which was our topmost priority. This one thing has told us the entire outlook of the government, the mindset which government was going through. And if you see the questions, they were almost aligned with that. There's a full-fledged question asked on it that COVID has brought set of challenges which can be converted into an opportunities and so and so. So could you see that even the cover page is saying a lot? Forget about the other things. Why? Because this document is something which is written by A, seasoned economists, they are experts. B, it has been written with this mindset that the country and the investors and the others, they should be aware of that what India is. And if you see very carefully in the Mother's India map, we have got the V-shape graph also, that we are witnessing V-shape recovery. Could you see that even the cover page was saying a lot of things. In fact, what question Subham has asked belong to this chapter. Does India's sovereign credit rating reflect its fundamentals? The answer is no. So he said he have not rejected it. If you see this chapter, does India's sovereign credit rating reflects the fundamentals? No. That's the point. So that was a question he was asking for others if they could not understand why this question. So he was saying that that is not reflecting our fundamentals. That is in a way telling where we stand and so and so. So we have not rejected S&P. That would be wrong to say. But yes, we had said that that is not the yardstick. We have other strong fundamentals also. So I hope it's clear to you. All right, it's a wonderful document. I must tell you that this is really one of the best documents and thanks to this, in fact, may not be for you people, but I am really thankful to our Chief Economic Advisor now. He's taking additional step. And I think that's worth of it. After economic survey issued, he himself comes on YouTube and make a video of 1.5 hours briefing that what entire economic survey is all about. Obviously, that is for informed people. As you know the things now, you have read economics. Even you can listen to that link. The moment economic survey will come, within one day he will come on YouTube. This is he's trying to do from last 2-3 years, that he comes on the YouTube, he gives the brief idea to the people that what exactly has been the crux of economic survey. So if you see that, that's the reason why I told you on the day one that it's better document. Economic survey itself is a very good document and not that difficult reading. You should be just referring to whatever is said in the introductory part rather than getting into the data, facts and figures. Here a question is coming, sir. I hope, Shubham, you're answered now. Akhilesh is asking, sir, can you please tell issue size of IPO? Issue size, I told you that the quantum they're expecting from the market. That is the issue size. That how much money we are thinking that we will be raising from the market. Sir, I think government talks about both China and India as these ratings not shown positively according to their progresses. The reason is something, one of the reason is something because, they have Western way of calculation. Western way of calculation, that's another thing. I don't think here it is required. Had it been MA economics class, I could have told you that why, there are bias in their rating methodology. Even Amartya Sen has been very critical on these sovereign ratings. Sovereign rating means the rating of the government. He said that the approach is very Western, keeping the Western parameters in mind. It's like that, if you consider smartness, by the height of the individual, and you say the height is should be between 5.2 to 5.8. In India, many people you will feel that they are ill. That's wrong statistics because your average is faulty. Your average is Western centric. So if your average range of good height is 5.2 to 5.8. And most of the Indians, if you see, particularly, if you go in certain areas, there's Ganga Doab and all, you will see that average height is slightly lesser than that. So that means people are ill in India? No. It simply means that your parameter is Western centric. Just to give an example, a loose example to compare with. So they are using certain methodologies which are Western centric. Piyush Goyal today, but I'm very happy that you are reading newspaper. This is what I wanted on the day one. Piyush Goyal today has declared that to MNCs that there should be whistleblower. I think it will help in attracting more investment in India by more MNCs. Obviously, we need to create more favorable infrastructure. We need to create more clarity in our policies. That look, this is what we want, and India has potential of being what is called you can say that we had that potential to go and to become what is called the front face, particularly in the Asia. I'm not saying like China because China has some natural advantage. Look, China's gold deposit. We are nowhere, not even, we are not even what you can say like, if you see the kind of gold we produce every year and the kind of gold China ranks 1 in the gold production, and we are way lesser than that. Even Azerbaijan is way more than that, almost triple to us. So China has reserves. That's, in fact, look, semiconductors. China had the foundries. You might have read in industries about semiconductor issues. China got the foundries for it. So they are having little advantages over us. The size itself matters to some extent because, the dragon is bigger in resources. But barring China aside, I think China and India both have chances to grow together. And that's why I appreciate what Shashi Tharoor rightly said once, supported by even our contemporary finance minister, that China and India, we must understand that again China is going to be the biggest trade partner of India. Though as per economic survey you will see USA is the biggest trade partner, but the latest data are showing China got its position back again. This way they are our biggest trade partners, and we should be respecting that thing also. And both India and China has enough of market to grow. Government has used approach in the first phase that India can prevent from COVID peak and again start economy as soon as possible. But in the second phase, it not hold this approach in second phase, and that's why we seem our present economy to come on V shape. That's a different debate. I don't want to get into that because obviously I'm hoping that you might have discussed it in your mainframe discussions. But then even I think that thing is gone. That thing is gone. In the second phase, obviously government was now knowing there's a threshold of the things, right? So we were going for those calculations that, what is the right threshold, where we should be. So recently there was news regarding manipulation of rating. Georgieva was facing some allegations. Yes, that's there. That's always there. And that's what. Shantanu is asking MCS Essex portion briefly a bit. Not required. Only thing which UPSC can ask is that it is related to what? It is related to what is called currencies, and it is related to what is called derivatives, future derivatives. But yes, let me give an example. Let's say dollar. Let's say dollar. What is the situation of dollar vis-a-vis rupee? Dollar vis-a-vis rupee. Now, if I think that rupee is going to appreciate or depreciate, accordingly I can purchase dollar and can sell it. Not only dollar, there are various currencies in which you can do the trading. So you buy the currency at a lesser cost and you sell it at a higher cost in the exchange rate. That's how it has been done, but not required here, because I told you here we are not for investment purposes. Because to understand that, you have to first understand that comparative chart of effective exchange rates for for countries and the global scenario of it. Those who invest into that, they keep an eye that which, like we all are knowing, India has a different stand from the last few months, that we will not do something if our currency is depreciating. We will not do anything if our currency is depreciating till this point. We got a floor point. We are allowing to some extent our currency to depreciate because we want to promote export. And that's why I was 0% surprised to see that question in prelims. The question was asked, if the currency depreciate, necessarily this will happen. Because this is RBI's approach. RBI's approach is this, that now we will tolerate currency depreciation to some extent. The reason being, because if currency depreciates to some extent, export will increase. How? We'll understand a little of it in exchange rates. But not that much so that you can go and do trading on MCXSX. That's why foreign policy is based on geopolitics, as geographical decides our economy and political both. Yes, it's geopolitics. Like Iran. I'm sorry to say that, look, when something goes wrong with the Iran, we pay the cost. Uncle Sam, that is USA, and Iran, they had their roller coaster rides of friendship and foe. It's on a roller coaster ride. Because obviously Iran was having the maximum reservoir of oil at one point of time, crude oil. And crude oil we are purchasing from the outside. That is our biggest import. As per to this economic survey of 2021, the biggest import is the crude oil, the petroleum product. And look, Iran is our trusted trade partner right from the very early days. And what happened when in Iran we got the petroleum sector? I don't want to get into that petroleum sector because in industries that is a concern. But when you talk about petroleum, you know what? These British companies, they realized that Iran has petroleum. So they controlled that and they made a rule, and the rule was that the company will have certain share and the local people will be given certain shares. That's how the rule, which was definitely favoring the companies. In 1952, in Iran, there was a big leader, Mossadegh. Mossadegh was a stalwart of Iran. What he did, he nationalized these oil resources. People got angry. Particularly the investors of Europe and America. So they opened a coup d'etat against Iran. A military attack was done. Mossadegh was in a way house arrested and later on assassinated. And almost a token fellow called Shah family of Iran was made head, and again they got control over the reservoir. We were banking upon the Iran. And then in Iran things changed around 1978, and one big leader came up, Abdullah Khatani. That fellow, Ayatollah Khatani, sorry, not Abdullah, it's Ayatollah Khatani. So Ayatollah was one great leader of Iran from them, because every great leader might be willing to somewhere else. So he was one who again, and since then America and Iran, we were having some agreement with the Iran for our oil, and then Uncle Sam, Donald Trump, put him sanctions on Iran. Again we are helpless. Our exchequer got disturbed. So resources matter a lot. Here China got advantage. One, they are close to Russia, so they get easily gas at a much lesser cost. They have their own resources, especially if you see the northern part of China. So the entire provinces of the northern side have plenty of the gas. So there are several factors. In fact, their closeness with this Baltic Sea area. So I hope you are knowing the world economy, at least the world map. Because I'm quickly referring, because knowing this fact that I am answering a question, not discussing something. So yes, geopolitical things work there. They do matter. I gave just one example, which is pinching us the most these days, because we are having restrictions that we cannot buy much from Iran. Though Iran is requesting us, and we are to some extent made a deal with the USA that we will be giving our funds for that Chabahar project, which India is working upon in Iran. From there we are making a railway track also to Delaram. So keeping this, these things, these situations in mind, it becomes very imperative for a country like India that we should be working upon. That's why I think this is very right when government is working a lot in terms of international solar alliance and renewable energy. So what a surprise this year's mains, last year mains, you got a question on that, solar energy. So that's how these things work. So yes, geopolitics plays an important role in that. Nowadays, one of the biggest challenges in Katsa, look, there are several factors running at one place. It's like playing that Sudoku, several factors, at least 9 factors together. And for a country like India, look, I'm sorry to say, but that will be silly to think that we are insulated from rest of the world. We are very much connected, and we need what is called a lot of favor from various countries for our resources. So that's one of the reasons why our policy has to be a little open, and we should not be behaving that way that, okay, self-reliance is something which is a good idea, but self-reliance should not be leading towards insulation from the rest of the world. So that's how it is. But I think I have gone into that industry section. That's not required here. Berlin suspended Nord Stream 2. That's, I know that. All right. So look, I can say one thing, that this Katsa issue, you can read today's Indian Express. It is well explained there, if you want. So, but I won't get into that, because that will be a complete industry sector that's called defense. That doesn't make sense here, because I told you that I will be discussing about finance, I will be discussing about these things like balance of payment, etc. Right? So, Atmanirbhar Bharat contradicting foreign MNCs? No. No, not at all. Atmanirbhar Bharat does not mean we are against import, not against MNCs, and there is a slight difference between the two. Understand this point. We are not against MNCs, we are against import of the things. Alright, fine. So coming back to the discussions, so we have discussed these things, anything, because one thing I'm little concerned now and little scared also, because whatever we have discussed from their questions are not coming. This is something which is creating a doubt in my mind. Is that clear to you all absolutely, or whatever we have discussed from there, anything which is unclear? All right. So as I was talking about derivatives, perhaps you might be requiring some more clarification on the derivatives. So as somebody was saying yesterday, that said, why don't you give another example to make it more clear? So I will take 2-3 minutes to explain that with the help of example, because now you know the term. There is forward derivative, there is a future derivative, there is option derivative, there is a swap derivative. So let's take some example to make it clearer. So what is derivative? I told you, it's a document. First thing, it's a document. Its monetary value is something which is coming from any underlying asset. Underlying asset. Any underlying asset. It could be anything from where its monetary value is coming. Fine. So derivatives are a kind of document, right? Let's make certain combinations of it. Mr. A and Mr. B. Mr. B is a farmer who makes jaggery. Let's say example of jaggery. Mr. B makes jaggery, and Mr. A somehow was knowing that now this is the time sugarcane will come, this will be the cost of jaggery, and after COVID maybe jaggery demand will increase, whatever. He's a businessman, he sensed it. So he made a deal with Mr. B that whenever your sugarcane is, when you are harvesting your sugarcane and you are making jaggery, I will purchase jaggery, say 100 kg at the rate of 50 rupees per kilo on this particular date. So a document is being prepared, and A gave this document to B, or you can have both the parties agreed, they got their copies, and now it was decided that B will sell A 100 kilogram of jaggery at the rate of 50 rupees on this particular day. This is a derivative. That document shows. Now, Mr. A can show to anyone that I have 100 kilogram jaggery with me on this particular day. And I can do trade after that, obviously. So, if I say on this particular day, I'll get 50 kilogram jaggery. And then I can go to the people and say, look, I can go, can say that, okay, fine, I will provide you jaggery on, let's say, the date here is 31st December. So, I'll say I'll provide you jaggery on 1st January, 2nd January, and I can do further trading on that. So, I have not to wait for jaggery to be physically with me. This document will make me capable to do trade with those who might be dealing with the jaggery later on. So, this derivative is going to be helpful for this fellow. This fellow, it's a kind of arrangement where later on the thing will be given. This is called forward derivative. Forward derivative. Forward derivative. This date, let's make it 31st December 2021. This date is where the deal will be settled. Till that time, both of them having document, this fellow can show that I have 50 kilogram jaggery, I have 100 kilogram jaggery with me. And let's say this fellow is now dealing with those who are making, because remember, why I'm saying this data, just to, coincidentally, if you see, around your Basant Panchami, you require jaggery. Jaggery, you know, a lot of products were needed in the Basant Panchami or, you know, that time. So maybe he can deal with those who are making sweets and all that. I will provide you jaggery on 2nd, on 3rd. This is how, and he can make further derivative on the basis of this, right? This is called forward derivative. But here there is a problem. The problem is this document is not having much of legal validation. It all goes on trust. It all goes on trust. And if B think, no, jaggery got suddenly so expensive, might you know, deny this. Or A might deny because he might have found that, oh my God, jaggery is now available in 10 rupees. Why I should be spending 50 rupees on it? So both the parties can deny. This is called counterparty risk. Counterparty risk. So keeping this in mind, what could be done? What could be the way out? Way out is if there is a third party who ensures that if any of the party is not keeping their promise, they will be coming into the scene and will be helping out. That's why this forward derivative was converted into future derivative. Future derivative which is legal. It's legal and can be traded. So it can be traded also. And SEBI and the other stock markets like MCX, NCDEX, these are the one where you can purchase and sell it. So let's say I got a future derivative of 100 kilogram jaggery at the rate 50. I may sell it to somebody else. I may sell it to somebody else. In fact, the farmers can do it. And you might have seen that, you know, these days when you got an FCI go down, you deposit your thing in FCI go down, or if you deposit your thing in the cold storage issue a receipt, negotiable receipt, which you can sell to the others. So these kind of derivatives came and they were called future derivatives. Now, again in the future derivative, what is the case? There's a due date. There's a due date. On that date, I will settle it. Before that, I have only the document, no physical. But here they said to have future derivative, some margin money should be there. Some margin money should be there, which should be utilized here and there. So margin money, A will give some margin money to B, and if party is not buying the thing or not keeping the promise, that margin money will be confiscated. confiscated. So in the future option, we got a margin money required, A. It's legal now and can be traded further. Now, in the derivative itself, it is mentioned that what is the margin money, what is the amount, when, what is the rate, when it is will be purchased and sold, what is the final day. Once they got in the stock market, we made second last working day of every month will be the settlement date for it. So Thursday of the last week when the stock market is there, that is the day where the derivatives has to be settled. On the monthly basis. Derivative can be created for 1 month, 2 month and 3 month. So that's how we got the day settlement. Earlier what was the case, that say on 31st December, I feel I'm not in the position to still buy that. I need more time or something like that. In that case, I'll say to the B boss, I will purchase your jaggery after 1 month. You do one thing, whatever margin money I had given, you keep it. I am ready to lose it, but please hold my jaggery. I'll purchase after January. This thing was called badla, contango in English, badla. But in India we call it badla. In fact, UPSC has asked badla once. Badla is related to. Very basic question, but you should be knowing at least. So contango was there. People misused it. That's why SEBI said contango is not allowed. On this day you have to settle. Now either lose your margin money or buy the whole product. Buy the whole product. In that case, you have to, as of now in trading, the margin money is 1%, roughly. Average is 1%. So I will give 1% margin money, and on that day of settlement, either I will purchase the whole thing which I had made promise for, or I will lose my margin money, whatever the case is. That is called future derivative. Now, one more kind of derivative can be called, and that is called option derivative. In option derivative, when I make the document, I make it clear I may or may not buy it. Here to I say I will buy it in the future. In the option derivative, I said very clearly I may or may not buy it. Let's say I wanted to buy a land. I wanted to buy a land, and I'm not sure whether 3 months, 5 months down the line, I will be in the position to buy the land or not. I love the land. I found the land very useful, but I'm not very sure about my payments coming or not. But I also don't want to lose the land. So what is the option? I went to the owner and said, boss, I may purchase it. I'm not guaranteeing. I may purchase it at this rate on this particular day. So let's say on this particular day, let's say in March 2020, I'll purchase this land. Till that time, please do not sell it to anyone. This is the rate I will offer you. This is the deal I want. I may or may not. It depends whether I got the money which I'm expecting or and so and so. So I made it a derivative when I said that I may purchase this land from you on this particular day. On this particular day. Now, the moment I had it, listen to me carefully, I might deny, but in that case, whatever margin money I had given, that will go. But till that March 22 is coming, the fellow cannot sell land to somebody else. So it is obligatory on the seller side, buyer may or may not. Because I made it clear, we make this kind of agreements. What advantage will I get from this derivative? Maybe I'll take this derivative and I'll go to someone who's a big investor. Boss, मेरे पास जमीन तो है लेकिन पैसा नहीं है अभी. तो क्या करे तुम क्या करोगे यार छोटे आदमी तुम एक काम करो ये दो अपना कट लो निकलो. You take your cut and I will purchase the land. Maybe I got some some income into that. These kind of things they happen. Right or wrong, I'm leaving this to you. But this is a business. That's how people, this is very important business, but where people are working as a connecting link. Broker, as you can call it, connecting link, broker, middleman, whatever term you want to use. But a lot of people do that business. Even Jignesh Shah was one of that fellow only. He was doing this thing only. So this is kind of option is called where the buyer may or may not buy, but it is obligatory for the seller to hold that thing up to the given due date. And I will give a margin money. If I'm not buying the land, my margin money will go away. So let's say I said I'll purchase your land at 1 crore rupees in March 2023, I'm giving you, let's say, 1 lakh rupees, 2 lakh rupees as deposit, as margin deposit. On March 2022, if I'm not purchasing, my 1-2 lakh rupee will go away. I cannot claim that. That is very accepted. That happens. That's legal. So that's why when you give a margin money, that don't expect that margin money will be returned. So margin money is what you are losing. For other party, at least he's getting margin money for sure. And he might be having his own calculation that whether I get a, let's say, the fellow residing somewhere in another city or in another country, he just came for Deepavali. So he knows that where I have the time, so let's have some deal. Maybe it will be sold. Otherwise, at least the margin money will come. So it depends on the parties to parties, whatever their conditions are, their situations are. Everyone's gauged their potentials, their chances, their challenges, and that's how people do these kind of deals. That's called, as I will take call or not. It's up to me now whether I will take the call or not, whether to buy that or not. That's what is called call options. Call options. Other could be put option. Now, what is put option? Put option is, let's say I had a shop, or I had an institution. I made a startup. मैंने कुछ अपना startup शुरू करा. I started my company, and I know in COVID time, God knows when lockdown will go over, whether it's not or not. So I went to another fellow and I said, boss, I will sell my company to you on that particular day. On that particular day, in this arrangement and so, right? In this arrangement and so, I will sell my company to you, or I will sell my product to you on this rate and so. Other party agrees for it. Other party agrees for it, that he will buy. He will buy it, and agreements are made. He might will give some token money to me. Now I'm using the term token money. Earlier I used the term margin. Now he gave me some token money. Okay, fine, I'll purchase, not an issue. So I got that startup. And in the COVID time, I was knowing it's not working, so I gave it, I went to a fellow and I said, I will sell my company 3 months later to you at this rate. Now, after 3 months, it's up to me whether I want to sell it or not. But if I'm selling it, as other party is ready for it, you should, he is having obligation to buy it. If I'm not selling, I will return the token money, maybe sometime with certain charges. Generally, when the put options are made, we say that whatever token money I'm giving to you, and if you are not into the trade, if you're not into the deal, you will return my money with this rate of interest. Something like that can be made. So depends upon which we are, and all that can be traded in the market. That's why we call it call option, put option. So we got forward derivative, future derivative, call option, put option. And the last one is, let's say what's called swap options. So again, for example, Mr. A has taken loan of 10,000 rupees at the rate of 6%. Mr. B has taken loan of 10,000 rupees at the rate of floating rate of interest. Floating rate of interest means it will be decided periodically. It is, I'm sure you might have heard of it, that nowadays we have external benchmarks also. You can take loan either on MCLR or you can take it on external benchmarks. Janak Raj committee has recommended for it. People do that now. They align it with the repo rate. They align it with what is called treasury bill rate, whatever. So he got floating and he got fixed. Now, he's thinking, nahi yaar, maja nahi aa raha, rates are fluctuating, it was not the way I expected. He might be thinking, nahi, I think it will be more favorable if I go floating. So somehow their expectations are, in a way, becoming complementary to each other. Compatible to each other. So they may make an arrangement whereby they can exchange these things. That will be called swap derivatives. So these are the common derivatives. Obviously, it is for you, the logical understanding is important because you're not going to do trade into it. But when you go in government, in jobs, as a district magistrate, many a time you issue certain derivatives. Maybe then you will detail further that how it works and all. So rather than getting the deal done, you want to book certain things, right? So that that booking is something which is like when you book the money for a car, what is that? A call option. कि आपने पैसा दे दिया, अब आपकी मर्जी है कि आप जो है खरीदें नहीं खरीदें. हालांकि in the car case, generally the owner returns the money. You know, कि whatever your booking amount you have given will return it. But if a legal agreement is made which can be traded, that will be called as derivative. So that's how. And in business, there's one thing which you need to understand. In the business world, we cannot go for all the time then and there deals. Deals are, if you're trying to do every deal in cash then and there, your business cannot run. You have to make very often derivatives. So that's the reason why, and some of the derivatives can be traded into the stock market. So I hope it's clear to you, Shamim, now? And others? So in Badla, there is compulsion on seller side, but the buyer has its own consent. So yes, when it comes to Badla, buyer will request seller ki boss, कायदे से I should have purchased it today, but I don't have money, or I'm not in the position to do. Can you hold it for one more month for me? And then what I will do, I will pay the amount to you, and whatever, let's say, token money has given, that you can hold. Let me give an example that how Harshad Mehta manipulated. He made derivative of his big house. His big house. He made derivative. He made business with almost everything. He made a derivative of his big house. Derivative of his big house, and that he utilized. Now what he did, he made derivative of the big house, a valuation was done, and on that he made yet another derivative with other parties. So let's say he came to me and said, Sunil bhai, give me this much loan. This is the token which I'm giving, let's say 2 lakh rupees, give me 1 crore loan. Guarantee is my house, and on this particular day, I'll give you this much amount plus some interest, whatever. This will be a kind of debt derivative, right? Now, I gave him money. The guarantee was the house. Legal document was made. Fine. On that due date, he came to me, maybe because what happened when he was doing wonderful, some people deliberately wanted to stab him. So the beer cartel was deliberately making sure that the prices are lower. And now he was in mess. So what he did, he used the Badla route. He came to me and said, Sunil bhai, wo 1 lakh rupees rakho, koi baat nahi, jaane do. Aap 1 mahine ki mohlad aur de do. And that's how the beer cartel could not judge from where he's getting the money. So he misused it in a way, you can say, these kind of things. So there are several examples though in the market telling us that how this can be used positively or can be misused. That's why we got all these things regulated by SEBI. Earlier it was regulated by forward market commissions, FMCs. So this is how we got, you should be knowing the concept, that's more important rather than getting into, because obviously when we are making derivatives, you need a professional, a lawyer. A lawyer is needed because we make a notary of it, stamp duties are taken, and then the documents are made. Yes, needless to say that derivatives are more riskier, but short-term people, short-term investors prefer this route, particularly those who are actively into the trading and business. They do prefer because it provides quick money, right? But again, as I told you that it's not for you. You have a better investment, and that is invest your time in UPSC preparation and come with a flying color. That's also investment, time investment you are doing, and time is not less than a money. If I could make a derivative, every time has a derivative. I could say, as an economics student, I calculate everything. Let me give an example. How can I make derivative of your time? Let's say you have not worked hard. And you did not get into the job. Let's say, God forbidden. Or get delayed for 1 year. Now calculate the 1 year salary, its interest. Every year, whatever your salary might have increased with every promotion, that much money you're going to lose. So this time is very valuable, which you are running short of. Use every minute very carefully. So that's how it is. I can make derivative of it. If I calculate, you cannot imagine that 1 year's delay can bring how much of, it will come not less than I think 10-15 crore rupees if I calculate in today's time, in today's price value. That's why I told you, I might have referred that time value calculation of money is one of the favorite things in economics. But for that we need econometry. That's not required here. But yes, it is possible that I can calculate that from now, each day of your is going to be how much of worth, presuming that a little hard work had made you IAS and otherwise you've missed it. So you cannot imagine that how much of loss you are making rather than how much of gain you are going to have. So use the time very religiously. The days are, you can say time is ticking now. So that's your investment. Don't think much about it. All these things, fine. And don't worry, in the last I'll give you my email ID. Once you're in the job and want to know more about it, we can talk. So this is how we got derivatives. I hope it's clear. Let's quickly write about it so that we can move to the next thing called balance of payment. So you can give heading derivatives. Derivatives. Lakshya is asking that we have these are two different options. One is call, another is put. You have to clarify which you are going for. Derivatives. It referred to those arrangements where the monetary value is derived from any underlying asset. Is derived from any underlying asset. Is derived from any underlying asset. Underlying asset is derived from any underlying asset, and could be largely of following types. First, forward derivatives. It refer to forward derivatives. It refer to that agreement where one party promises to buy certain amount or definite amount at definite rate on a definite date, which becomes obligatory to other party. However, as these derivatives were not having proper legal framework to support they were often disrespected or disregarded. disrespected, disregarded, dishonored, whatever term you want to write. Often disrespected. To make it more organized and tradable, to make it more organized and tradable in secondary market, and tradable in secondary market, to make it more organized and tradable in secondary market, future options were created. Future and options, we call it FNO. Future and options were created. Future and options were created. Next you can write future derivative. Future derivative. Future derivative. It refers to future derivative. It refers to those forward derivatives which are within the ambit of legal obligations, within the ambit of legal obligations, and can be traded on exchange. And can be traded on exchange. Can be traded on exchange. Generally, they are issued for 1 month, 2 months, or 3 months. One month, 2 months, or 3 months. 1 month, 2 months, or 3 months. In fact, if you, I have just opened here in front of you derivative trading in India, HDFC market. If you see that, how to trade and all that, but I would like to show you the tariff. Here might be the quotes. So here you can say that they might provide you the entire data. What is the expiry date? 1 month, 2 month, 3 month. All these wherever you have the option of trade, all the brokers provide that information, that how they entertain it and what are the deals and how much of charges they are having, and so on and so forth. And so you have said 1 month, 2 month, and 3 month, and the last Thursday of a month, last Thursday of a month, in bracket you can write second last working day. Is the settlement date. Is the settlement date. The next, option derivatives. Option derivatives. Option derivatives. Option derivatives. Option derivatives. It could be a following two type. Could be following two type. First, the call option. Call option. In such agreements, it is up to the buyer whether to buy or not as per contract, whether to buy or not as per contract, while it is obligatory for seller, However, if the buyer is not buying, the margin money given might get confiscated. Second is put option. In such derivatives, the seller has the freedom to do the deal or not, while it is obligatory for buyer. In such cases, if the seller is not selling, may have to pay or may have to return, that may be a word also, may have to pay / return, the deposit with or without interests. The next is swap derivative. In such derivatives, two compatible contracts might be interchanged. Between the parties. For example, A is having a loan at fixed rate, while B at floating rate of interest. If they agree, to interchange, can go for swap derivative. So that's how we got these. So we got debt instruments, we got equity instruments, and then we got derivatives. These three are the ways through which investments and the trade and the businesses are being run. worldwide, no matter whether it's India or in any nook and corner of the world. So this is how we got when we talk about how this things are. Now, quickly we can write Securities and Exchange Board of India, SEBI. I have told you briefly the history of the SEBI, so we can quickly write about SEBI so that we can finish this topic. You can write that Securities and Exchange Board of India, SEBI. 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 In India, as early as 1947, in India, as early as 1947, Controller of Capital Issues was introduced. Controller of Capital Issues was introduced. To monitor various exchanges so there were some other exchange also, but they have disappeared, they have withered away, so there is no point of talking about them, right? To monitor various exchanges. This can be called as precursor of SEBI. This can be called as precursor of SEBI. Precursor of SEBI. In 1988, SEBI was introduced. SEBI was introduced. But the infamous Harshad Mehta case, clearly highlighted the necessity of a statutory body in this regard. In 1992, the SEBI Act made SEBI powerful enough to be the key regulator of exchanges, investors, and other market infrastructure like depository participants, etc., and other market infrastructure. They work in the capacity of being quasi-judicial. Quasi-legislative, and quasi-executive. Now I hope you are knowing these words, so they are self-explanatory in a way. Quasi-judicial, quasi means partly. Quasi-judicial means that SEBI got certain rules to put certain constraints, to give orders against or in favor of investors, whatever. So they can order a company that now, like we might have heard of this Karvi case. It was SEBI who ordered that now they should return money to the investors, and they cannot continue with the business because something very malafide was found in the handling of Karvi. So Quasi means partly judicial. That means whatever they are saying can be challenged to the higher authorities also. But in general, they got that domain where they can give decision. They can give any order in favor of investors, even they feel like these days we got one OTP verifications also if you are selling or buying the things, particularly in selling, if I could say. So you need OTP verifications. All the brokers have to provide the necessary information empaneled with the SEBI. So that's how we have. Even we have SMS scrubbing also. You might have heard the term SMS scrubbing here and there. So scrubbing is that we got a clear-cut template. In fact, that was the reason I think somewhere in second week of March, there was one day when the entire market was on the standby because scrubbing was introduced. Scrubbing is like whenever anyone is sending you SMS, now the SMS does not come to you directly. It goes to that telecom company operator which is giving you service. They cross-check it whether the template is right or not, and then accordingly it will be forwarded. So let's say SBI has sent you OTP. So that OTP will not come to you directly. It will first go to the Vodafone or the Jio or the Airtel, and Airtel already have a prescribed format by this SBI that their messages will look like this. This will be the template of the message. If any distraction from that is found, is observed, the message will not be sent to you, rather it will go to the cyber security cell to make sure that no phishing, phishing, that cyber attack and these kind of things have been done. So we have these, SEBI gives these kind of continuous upgradation of regulation and all. So that makes them quasi-judicial. As they operate, they do the examine, red herring prospectus, make it quasi-executive. They make rules and regulation norms, make it quasi-legislative. Look, it is highly unlikely, I think, that they will be asking the functions of the SEBI. But as you have just 200 words, I will advise you can make, these kind of things in pie diagram that, quasi-judicial, quasi-functional, etc., etc. That would be a better idea. So that's how we got SEBI. In fact, in your notes, there might be something about SEBI that how, or otherwise, any of the book which you are referring to, they might have given all these things in little detail. What I had said, if you are writing, it will be little detailed, but in this examination, when you have very few words to write, you should be knowing that how to use keywords. So the keyword is quasi-judicial, quasi-legislative, quasi-executive, which can be further elaborated in 3 points. That's how it is. Now, SEBI is also, you can write, SEBI is also part of, SEBI is also part of, SEBI is also part of Financial Stability and Development Council. Financial Stability. SEBI is also part of Financial Stability and Development Council. Financial Stability and Development Council, which is headed by Finance Minister. This question has been asked once, I think 2011 or something, headed by Finance Minister. Along with, it's on board. It's on board. Instead on board, that means the member of it, on board of G20 companies, G20 countries. On board on G20 companies, G20 countries, every time I'm saying company, G20 countries. I've been knowing G20 countries, part of G20 countries. To get the statistics regarding financial stability. To get the statistics regarding financial stability. Composition, needless to say, there is a chairman and there are other members. Generally, any of these things have 5 members, so that's how it is. Now, what does it mean when I say, though you are talking about something else these days, quite in news called FATF, because, as you know, Pakistan got a good friend now in the grey list. That's a different thing. FATF is a different thing. In FATF, we get tax information. In that, CBDT is the member. Here, what is the case that any factor going in G20 countries which might adversely impact the financial stability, we get the information well in time, and those who are on board get the benefit. From India, we have Department of Economic Affairs Chief Secretary. One member is that. Second member is what is called our SEBI chairman, and the third member is one of the deputy governor of RBI. Happening that RBI got 4 deputy governors, and we got one governor we got. So keeping this in mind, one of the deputy governors, although nothing has happened in the recent past because Viral Acharya was there, who has been very vocal on this platform, talking about when he was deputy governor. So this is how when we talk about, all right, Prashant, yes, Turkey. I don't want to name that, there's no point of it. So, you know that Pakistan's grey list, Paris-based organization, FATF, very good. That is, in fact, there are 2 of them organizations, FATF. Maybe I'll refer to it here while talking about balance of payment. If you are a member of that country in India, you can directly come to invest. That is called an advantage of being member of FATF. So we get the statistics regarding financial stability because of that, right? So let's say something is going wrong anywhere. Every country is keeping an eye. They have indicators, and they share indicators with the member countries. So our SEBI chairman get the data. If anything which may destabilize the economy is coming or surfacing, so that we are, like, let's say when the COVID thing started in October, and we were almost at the verge of making it pandemic, October 2019, SEBI was alert on it, that something might happen, and accordingly we were what's called anchoring our things. So that's the advantage of getting the data. So I hope it's clear to you. Fine. So this was about the stock market. Now, next chapter is again very interesting chapter, very important from examination point of view. At least one question, and that too of you say current affairs nature, or something very you can say relevant to whatever is happening around, might be asked. In mains you might get question, and that is called balance of payment. Balance of payment. Balance of payment. Balance of payment. But before coming to this balance of payment, so sir, we will be writing synopsis now. So we are apologetic for this kind of technological lag, and I request you that if something is missing in your dictation part, you can cross check with a synopsis. That would be better, because I don't know exactly where you have missed it. And we are really, we are trying our best, but it may happen, these kind of things. Because some people are writing that what after G20 countries, that means I told you that SEBI is member of it. All right. So it's there in the synopsis, not an issue. Now coming to the balance of payment, again, very important thing here. I'll take the opportunity to talk about the international economics a bit here and there, on and off. But before coming to the balance of payment, I would like to tell you 2 grosser things, 2 big things first. I hope you are knowing one thing for sure, that every company, every country, be it a company that is micro, be it a country that is macro. When we say macroeconomics, I hope you're aware of, in macroeconomics we refer either the countries or the states. Companies, individuals, households, Hindu undivided families, they all come into the microeconomics. So be it countries or be it companies, they all have their balance sheet. We have a balance sheet. On one side we have assets, on one side we have liability, as you know. That, on one side we have asset, on one side we have liability. You know that. Asset is something which increases your financial position. It's called asset. Anything which increases your financial position is called asset. anything which reduces your financial position, the financial value, is called liability. That's how we call the term assets and liability. I know you are knowing it, but I'm not leaving any stone unturned to start the things, because when I'm using that term, you should be aware of it. So, asset and liabilities are shown. This is called balance sheet of a company. Balance sheet of a company, or also can be called as balance sheet of a country. It's one of the same thing. Countries also maintain the balance sheet. India's balance sheet is maintained by Ministry of Finance. Very important ministry. I'm sure you're aware of this ministry. Ministry of Finance does it. And within the Ministry of Finance, there is very important department called Department of Economic Affairs, DEA. DEA. Now you can imagine that how important that department could be. When Arun Jaitley was there, Finance Minister, the DEA secretary had made various things as per the government policies and was rewarded to be the governor of India, of RBI. So he was the governor of RBI, governor of the Central Bank of India. I'm talking about Sri Shaktikant Das ji. He's an IAS. He was the secretary of DEA. So DEA, secretary is very important portfolio. DEA, Department of Economic Affairs, it makes budget. Not a surprise, these kind of things are asked. The budget is made by, Department of Economic Affairs. So assets and liabilities, every country makes, every company make. Is that clear? Asset, when we say, as you know, asset could be tangible and intangible. Look, that is the beauty of UPSC. UPSC has basic questions where your clarity is examined. Tangible assets are those assets which I can see. Intangible assets are those assets which we cannot see. Like, there is one teacher teaching you, there's another teacher teaching you. Let's say, for example, I'm teaching you here in the vision, and somebody else is teaching at some other place in some other institution. Let's, for the example's sake, maybe my outcome is more, his outcome is lesser. Maybe his outcome is more, my outcome is lesser. You cannot see. Both of us are teaching for 3 hours. But outcome might be different. Means students are learning more here or learning more there. I hope the first is the case. So in that case, this you cannot see. This is called intangible asset. Or any copyright, any property, IPR property, that all comes into intangible asset. Not a surprise this question was there. 2018, human capital is intangible asset. And that statement was right. So, intangible assets are those assets which we cannot see. That's the copyright, royalty, the skills of your human capital. That all comes into what is called intangible asset. Tangible asset, what you have, that is there. And in the liability we have. Now, every country or every company makes this complete list. Understand this point. And in the list, finally we'll see whether we have more asset or we have more liability. That is called balance. Balance. So when we say balance in economics, it has a specific meaning. I know some of you might be thinking I'm treating you as a kid, but I told you in the beginning that I will treat you as a kid, knowing this, that you don't know anything. So whenever a company is making the chart, or whenever a country is making the chart, they make assets, they make liability, and in the left, in the last we got what is called balance. Whether we have more assets, whether we have more liability, whatever. In fact, in assets, we have 2 types of assets. One is called liquid asset. Liquid assets. And one you can call as fixed assets. Liquid assets are those which are within 1 year getting diluted. So let's say I got something, and let's say I bought some property, and within 1 year I sold it. That will be called as liquid asset. There's a difference between liquidity and liquid asset. Liquid asset has relatively lesser liquidity. Liquidity is anything which can be converted into cash without time delay or almost no fees. 2 categories are there. No time delay and almost no expenditure. That's called liquid. That's why you call gold is liquidity, securities are liquidity, because you can immediately get money out from these things. So liquid assets and fixed asset. That's why you have read in GDP, fixed asset, how much we have made, called gross fixed asset. is something which is important, what you call gross fixed capital. That's how you estimate this. So looking at the fixed assets of any individual, you can easily know that how much they are going to grow. That's why this data is important, and every year economic survey provides this key statistics. In fact, as economic survey is in front of you, with the sir's permission, I would like to deviate a bit to show you one data, statistics, which I insist that whenever you are writing your prelims, few days earlier to that in the economic survey, at least go cursorily or on that statistics. Every year this will come in this in the chapter. Let's see that how it is. As it is in front of us, we can do that. In economic survey, there are two volumes, volume 1, volume 2. If you see in volume 2, there will be always a chapter called State of the Economy. Can you see that? State of the Economy. I opened the volume 2. In that we got State of Economy. Every year this data comes. This is called key indicators. I think this year it was in the last of the chapter. Yes, I reached there. Can you see this? That's called key indicator. Always look at this statistics. All right. नहीं? Leave it, no issues. I'll रहने दीजिए, कोई बात नहीं. Can we call cash as derivative because it also has not its own value but derived by the promise of RBI? Yes, but that is not derived by the promise of the RBI. That is derived against the cash which we had. I have been knowing it, what is called minimum cash position we have. So yes, you're right. To some extent, can be called derived, but we don't call it. We call it bank note. Bank note has a specific meaning that you might be knowing there. So it was for the first time in 1935 when America started it for the first time that they printed $1 against gold. That's why we got minimum reserve system coming up. All right, not an issue. So, कोई बात नहीं. So I hope it's clear to you. When I said assets, when I said liability, assets and liability, and look, that's why we look at the fixed assets. Fixed assets, that how the fixed asset matter. Any country, when we look at the fixed asset, or you can say gross fixed capital formation. So what is the difference between liquidity and liquidity asset is being asked. Liquidity asset is anything, any asset which was there with me for 1 year, less than 1 year only. Let's say I purchased a land, say in October, and I sold it in February. So it was an asset, but it was a liquid asset because it has not continued for more than 1 year. Liquidity is something which is there in front of us all the time, and we can convert into the cash, be it gold, be it securities, etc. That's why in the Basel we call them high quality liquidity. We have three things in what's called high quality. You might have heard Basel norms. In the Basel, we use the term high quality liquidity. Three things into that: gold, we have what is called securities, and we have cash. So that's how liquidity is something which is immediately can be used as cash. While liquid asset is something which might be taking time to sell out, but within 1 year, I liquidated that asset. Liquidation means I sold it out, or I got something out of it. That's how it is. Now, you got this term balance. So every ledger, every balance sheet will come with one thing called balance. That's why it's called balance sheet. So we'll make how much of assets, how much of liabilities. Assets more, that's a good thing. We can say positive balance sheet. Liabilities more, we'll say negative balance sheet. That's how it is. Clear? Web is asking something, but I think that's something which you ask, because sir might have talked about it, what exactly is the concern there. Anju, there is some delay, some lag, so I'll show you later. There is one indicator that we should be, because in prelims they ask question of this nature, that past 5 years this has been the trend of economy and GDP and so and so. So there is very important statistics, a chart which is given there in economic survey every time. Don't worry, even the booklet given to you, that chart will be presented. When it comes to balance sheet, is that term clear? Now, balance is when we look into that how much of assets and liabilities we have, balance sheet. And countries make the balance sheet, companies make the balance sheet. In fact, that's why, off the record, if I could tell you, one thing which I personally liked very much, on a personal note I liked it. Our finance ministers earlier used to take a suitcase to present the budget. Whenever they go for budget, they take a suitcase. Suitcase was a Western concept, that when they got the data, the entire liability asset data, that how much of revenue, income and expenditure we are going to have. That was presented in the suitcase. But when Nirmala Sitharaman ji, she became finance minister, she came with that typical Bahi Khata which we use in our ancient time. Red color book with the swastik sign on that. I personally, I don't know why, but I loved that. We find that she's giving a message loud and clear that we are not blindly following your practices. We might create our own. That was a gesture of confidence that our finance minister is not coming with that leather bag. Now he is or she is coming with that typical Bahi Khata which we use still in our businesses. So that was a very good gesture. Whatever. That's how we got balance. So balance, when we say, it means what? Balance simply means at the end what you are left with in assets and liabilities. What is balance of payment then? When we say balance of payment, it is the track record of how a country is dealing with the other countries. So a country dealing with the other countries, how much of payment is to be given, how much payment is likely to be received. So balance of payment is nothing but a balance sheet of a country with the other countries. So how a country is going to have deal with other countries, how much of payment they have to give to other countries, how much of payment they are likely to receive from the other countries, that entire balance sheet is called balance of payment. So I hope you understood the term. The term is, here we got a record that how much of money we have to pay outside and how much of money we'll get from the outside. The entire record of it, under various heads it could be, but the entire record is called balance of payment. That's one thing I wanted to know you, the term balance and how it is significant to us. Now forget about it. Let's understand something else and then we'll come to that. So that's how we got when we talk about balance of payment, right? Now there's another thing you need to know. Let me take you to the history a little, because I have to connect a few things and then I'll come to and see that how the balance of payment, what are various heads into it, and so and so. You know what? As we all know that 19th century was the time of what is called the Hail Britannica. UK was dominating everywhere. They were that century belonged to them. 19th century was of primarily UK. That's how you could say the Hail Britannica. The Britain was dominating everywhere. So UK was dominating in 19th century. They were almost everywhere, colonized almost every country. 19th century was like that. In that time, we got one thing coming up, that now economies were transcending the national boundaries. The trade with other countries started. However, the trade with other countries on a larger note started, you can say, roughly when we got these bon voyage, Columbus and Vasco da Gama, they came, those big journeys, what you call bon voyage. So bon voyage of 14th, 15th century has created a lot of resources for these European people, and they went everywhere, almost everywhere on this earth, as you know. That time, as between the countries trade started, one thing was becoming very significant, that how to identify which country is good, how much progress a country is doing, etc., etc. In science, you got standardization. Earlier, what was the case? Someone was counting in mile, someone was counting in course. Course is almost 3 kilometers. Someone is counting some other unit, and there was confusion. So they standardized. Listen to me very carefully for next 10 minutes, because this will give you the entire route of balance of payment, that why it is being done and what is the logic behind it. So in the early days, as in science, what was the case? Everyone was having their own measurement unit. Somebody is measuring in kilometers, somebody is measuring in miles, somebody is measuring in gauge, somebody is measuring in course, and so and so. To avoid this confusion, in science you got SI units, that it should be kilometer, it should be gram, it should be second, and so, whatever it was. In chemistry, you got IUPAC nomenclature, that this metal will be called this way, this will be the listing, and so and so. In biology, you got by nomenclature, that this will be the first name, this will be the second name, what you call botanical name, geological names, etc. Almost every discipline we can see that these things were happening, and economics was no exception to that. In economics also, attempts were made by some of the economists in the 19th century, that how we can compare countries, which country is growing how fast and how slow, and so and so. That's how we got this concept of national income. So national income, the idea of national income, where GDP, etc., were introduced systematically. So this was a churning which was going in the 19th century. They were continuously trying how to get a standard way of calculation. However, we could not do much on that. The only outcome was that Europe, particularly UK developed national income concept on the basis of whatever total value they got divided by population, and that you call as per capita income. That's why in India, the first calculation of national income was done by Dadabhai Naoroji in 1868, when he calculated per capita income of India to be 20 rupees. That's otherwise general information you get here and there in books. So because Dadabhai Naoroji was following the English way. Then 20th century came. In 20th century, we got another counter power coming up, USA. Now USA was becoming powerful, and then in 1921, when particularly in 1917, when the jars of Russia were thrown by the Lenin, and Lenin established a new system in Russia, the otherwise USSR as it was called then. I hope you're knowing that earlier it was USSR, and it got broke into Russia after Gorbachev. Whatever, but that was a different thing. You can say in 20th century, the power of England was challenged. We got USA coming up, we got Russia coming up. All these tussles, needless to say, were going to impact economics also as a discipline and the world economy. The imbalances between that resulted in a very unfortunate thing in 1929. You should know this incidents. In 1929, we have witnessed the vulnerability of our economy, and that is popularly called as the Great Depression. The Great Depression. Economies slashed, banking system almost became bankrupt almost everywhere. 1929 to 1932, 32, this was the situation. 1929 to 1932, we were in the Great Depressions. Economies slashed. Obviously, whenever depression happens, rich economies somehow get chances to bounce back. Poor economies suffer the most. Like we as a country suffered the most. Neighboring countries suffered the most. The poor economies, they paid the cost. Then war happened. We got the outbreak of that Second World War, all thanks to Hitler. And his miscalculations. So whatever, Second World War happened. Again, it adversely impacted the economic activities. And you can say from 1929 till roughly speaking 1940, the economic trajectories were in the negative domain. Not much was happening in any part of the world. Economies were paying the cost of this war affairs here and there. It was bloods on the street, and yes, you can say people were having what is called the money sweeping away from their pockets, whatever. This led to some kind of churning, some kind of rethinking, that when around 1941-42, as you know that Pearl Harbor happened, and then other things happened, and finally it was now almost set that the World War will come to an end sooner than later. People started rethinking. People in UK started rethinking how economies can come back on track. People in USA started thinking how economies can come back on the track. People in Russia started thinking how economies can come back on track. So every country was having their own way of rethinking how we can bounce back to the economies. This was a historical underpinning which I wanted you to know before I step into that what exactly was this balance of payment, because all this thing is correlated. So you can say now the economies were almost slashed. Everyone was thinking in their respective countries. In UK, which was one of the mightier then, it was the lead was by one fellow. His name was John Maynard Keynes. Now you should be knowing this name. If you're not knowing, I'm sure you're knowing it, but then even John Maynard Keynes, a big name from UK. He was thinking how we can overcome to this problem. In USA, this was the churning was being done by Harry Dexter. So Harry Dexter White was his complete name. So John Maynard Keynes, or in short Keynes, and Harry Dexter White, or in short Dexter White. Dexter White in USA, then in UK Keynes, these people were thinking that how we can bring economies back on track. In Russia, again there were people. However, in Russia, there was one mathematician with his one counterpart coming from Europe. As you know, that time Serbia was the head of, because Einstein, that was a time when, this place was very actively involved into these kind of activities. One fellow from Russia and one fellow from UK. There were two mathematicians. They came up with a model. I'm sure you have heard this model's name, called Harrod-Domer. Harrod and Domer were their names. That's how we got the term Harrod-Domer model. What Harrod-Domers were saying, they were warning. They were saying the way small countries are there, low-income countries are there, if they are not being given some support from the outside, they will collapse. After this Second World War, they will collapse. Because if you have low income, you will have lesser capital formation, and this way you will get into the trap, what Nurse called, Nurse was an economist, he called it vicious trap of poverty. Vicious trap of poverty. Low-income countries needs additional support. That's why Harrod-Domer said low-income countries should get money from the outside, what you can call as Tier 2 capital. Tier 2 is the capital which is coming from the outside, not yours. So they should get Tier 2 capital, and with the help of this capital, they should get their economy back. Not a surprise, sir might have told you that the first 5 years was called as Harrod-Domer model, because we took money from the World Bank that way. So three things were happening. I'm trying to, because they came together. One was, Keynes was trying how to revitalize European economy, particularly the England. Harry Dexter was thinking what needs to be done to revitalize the USA economy from the impacts of the World War and the Great Depression. And then there were economists, mathematicians like you can say Herod and Domer. They were trying to tell us that how the low-income countries require some additional support system. Dexter White from USA offered to the world that why don't you come together, let's sit together at one place and discuss what could be the future of the economy. And it was decided at one place in New Hampshire in USA. They sat together in 1944. They sat together and step by step, plan by plan, each and every aspect of the economy was discussed. That conference is popularly called as, on the basis of its name, called Bretton Woods Conference. Bretton Woods is the place where it happened. Bretton Woods Conference, led by these two gentlemen, I should say league of two extraordinary gentlemen. One was this White and other was Keynes. If you ever go to, if you join IRS, they will take you there. If you go there in the WTO office or IMF office, you will see that big picture of these two gentlemen together. It's one of the highly decorated picture we have. We think that this picture has changed the world. These two people, along with other delegates coming from Russia, from India we had our representative C.D. Deshmukh, the then RBI governor. C.D. Deshmukh was the first Indian RBI governor, 1943, so he represented on behalf of India. At Bretton Woods Conference, there were 3 agenda, and from this agenda, all the things are coming up. That's why I took this backdrop. 3 major agenda were there. First agenda was, as Herod Domer were warning, as Nurkse was saying, what we can do together so that low-income countries are coming back on the economic track. It was realized that let's make a fund, let's make a pool, let's make a money, and we should develop some institution which can provide them loan for longer basis at a competitive rate of interest, lesser rate of interest, and that too for longer term. That's how we got a bank to be called as IBRD, International Bank for Reconstruction and Development, as the name was, IBRD. IBRD. So that first agenda was how to create a common fund, a corpus, which can be given to low-income countries so that they can go for their economy, creating development, infrastructure, education, health, all these kind of things, sanitation. So there should be one thing, and that's called IBRD. However, soon we realized when 1944 IBRD came, then and there we realized that there are several countries in Africa, some other landlocked countries like Afghanistan, then they were those countries were not even having paying capacity. So what should be done for them? Little later, we introduced one more thing called IDA. This was the fund which will be given to those countries who cannot repay the money as of now, might be after 30 years, 35 years, 38 years they can repay. So we got 2 institutions, IBRD, and little later around 1961 we got another one called IDA. These 2 putting together were called World Bank. That's how we got the mighty World Bank. The idea was, following the Herod Domer model, that we should not be allowing these economies to shrink. Low-income economies should get money from the outside so that they can expedite their growth. That's why the first 5-year plan we took money from the World Bank. Second 5-year plan, third 5-year plan we took money from the World Bank. Fourth 5-year plan was little disturbed because after third 5-year plan we got 3 years gap, and Indira Gandhi got some ideological conflict with the Nixon. That was one of the reasons why fourth 5-year plan, our budget were put on hold. That's how you go above the 5-year plans. That's the fourth 5-year plan is the time when we thought of self-reliance on an aggressive way. That's how you read the 5-year plans, and you are aware of it, that the first 5-year plan was primarily Herod-Dömer. Second was following the Herod-Dömer designed by Mahalanobis. Third was, which was third was having its impact from one American fellow called Rostow. That's called takeoff theory. But then we got war with China and could not. So whatever, the point is that we were continuously taking money from the World Bank so that we can expedite our development process. That's how we got the idea of World Bank. So that was one agenda. The second agenda, which I said in the beginning, was that how we can standardize that calculation in economics, because every country was calculating in their own way. Someone is calculating this way, someone is calculating that way. There should be some standardization of the calculation, and there should be an agency which should be looking into how the countries are correlated, what are their status, how they are dealing with other country, trade and payments, etc., etc. And that task was given to another institution which came in 1944 out of this Bretton Woods, and that was called as IMF, International Monetary Fund. So I hope you understand. Now IMF is primarily for what? To make sure that countries are stable and their balance of payment is good. That's why IMF does not provide normal loans. It provides loans only in cases of balance of payment crisis. Now what if this question was asked? I hope if you're understanding this story, you have not to mug it up. It's so logical that IMF was based on this reason that why we should be. And IMF was given the task that every country should have same way of calculation. Same way of calculation. That's why we have IMF data dissemination standard. You might have heard of one thing called National Account Statistics, NASH. In India, we also prepare following the IMF guideline only. So that's how IMF became that SI unit, that IUPAC nomenclature, that in economics, that every country will be calculating this way. And that's how, little later in 1953, United Nations prepared one complete manual that how countries should calculate their GDP, other things, and that is what you call, I'm sure I've heard of it, called United Nations System of National Accounting, which defines what is GDP, what is GVA. This United Nations System of National Accounting came in 1953, subsequently amended in 1968, 1993, and finally 2008. That's why you might have heard the term here and there, 2008 series, 1993 series, 1968 series, or 1953 series. We line by line, point by point, follow United Nations System of National Accounting. That's why in MOSPI we have a division called System of National Accounting, which prepares the annual data called National Account Statistics, which is being given as per IMF standards. So second agenda was this. First agenda was to create a money so that economies can be brought onto the track, particularly the weaker economies. Second agenda was to make sure that countries have proper transactions, balance of payment, and standardization will be done by IMF. IMF will do the standardization of it. In fact, this is where IMF tried to standardize other things also. How the country should calculate national income, how they should calculate inflation, what should be the formula for it. As you know, Laspirus was a German actually who gave that formula. So that, how that can be done. So all these things was prepared by IMF. So IMF in a way became that, expert to provide us calculation methodology and all these kind of things. Third agenda was how we can make legal procedure, legal provision for various countries so that we can make that international trade between countries is smooth. One country should not put unnecessarily barriers on others. International trade should be promoted. In Bretton Woods, we wanted to make one institution called ITO, International Trade Organization, which will make the laws, rules, regulations, and will also work as a unit for any dispute. But people could not develop consensus. We were not ready for it. We said, no, it's not, it's not possible. It's not that way. We could not develop consensus, so it was said, okay, fine. As there is no consensus, no issues, we said, okay, fine, at least we can make general agreement on trade and tariff. Tariff is how much you are going to charge. So we got a general agreement on trade and tariff, which is called GATT, General Agreement on Trade and Tariff. And little later in 1995, that GATT of the churning of Uruguay round was converted into what you call WTO, World Trade Organization. So could you see all the three has their roots in Bretton Woods Conference. That's why I wanted to tell you this historical part in 15-20 minutes so that you can well connect that roots are where and why it was. So now we got WTO, which makes international laws, make sure that whatever the trades are, that is fair enough. That's why in our discussion we'll first talk about the composition of balance of payment and its various ingredients, and then we'll see that what is there in World Bank, what is there in IMF, what is there in WTO, and what are the ongoing disputes. Because I hope you're knowing it that we are going to meet for 12 WTO conference, ministerial conference, all set for it now. Bad feelings for Nur Sultan because of COVID, it could not turn up. We got the next one now in pipeline in Geneva. I'll update you accordingly that what is there, what are the major points of agenda in WTO this time. So this is how we got when we talk about Bretton Woods Conference. So I try to tell you in a story format so that you can connect easily and you have not to mug up any part of it. So that's how we got Bretton Woods Conference, and from Bretton Woods Conference we got these three major outcomes. One was to make World Bank. Another was to make IMF, which will do the standardization, that how the calculation should be done. And that's how in 1953 they defined what is GDP. When you say that within the economic territory was what? That was defined, that these things should be calculated in economic territory and so and so. So this way we got this complete picture that how Bretton Woods had made its impact. Now, IMF has been given the task to prepare how the balance sheet of balance of payment should be made. And every country follows that. We are no exception, we also follow that. They keep on changing it. And the latest, as I told you, we are following 2008 series. That manual which is prepared by IMF is called Balance of Payment Manual. We are having 6 series of it, 6 edition of it. That's what is called as Balance of Payment Manual 6. So what a surprise, I think in 2008 or 9 examination they have asked this question. So that's because that time it was in news that we have changed methodology and slight changes were made in our balance of payment methodology. So balance of payment, in balance of payment, if you see, as per IMF guideline, we got 2 clear-cut heads. One, what you can call as current account, and another what you can call as capital account. Current account and capital account. So we have one head called current account and one head called capital account. We follow the IMF guidelines, and in India this balance of payment is maintained by RBI. As per IMF guideline, all the data has to be maintained in dollar, US dollar. All the data has to be maintained in US dollar. So now why dollar was taken so seriously? This question naturally comes in mind. The reason was because after 1929 crisis, just listen so that you understand the logic. After 1929 crisis, what happened? Many of the banks, many of the countries, whatever their currency was almost of no use. It was like a piece of paper only, with no significance. It was like a piece of paper, because the banks were not in the position to pay them. They were not having enough of repository. In fact, the worst hit was Germany. Deutschmark was the worst hit that time in 1929. As it happened, after 1932, when we came out of the depression, America was the first to do this. And that's where they got advantage. In 1935, America said now they will print $1 only when they will have 0.88 gram gold in their repository. 0.88 gram gold. And this way suddenly dollar became one of the most accepted currency. There was a time that if you have $1, you can go to any American bank and say, give me sovereign gold in return, give me gold in return. They will give you the gold. So that's how, you got acceptance, and suddenly dollar became a very important currency. Many currencies followed the same pattern. In India, we also followed the same pattern in 1935, and RBI said that if we want to print 100 rupees, we will have 40 rupee gold at our disposal. but little later it was realized that it's not practically possible. So in 1956, from this proportional reserve system, we converted to minimum reserve system, when we said we will have 115 crore worth gold and forex reserve, as per your discussions. So this is how we got, it was USA. So in 1944, when the Bretton Woods and all these things were taking place, when IMF came up, the most accepted currency was dollar. However, in 1968, when it was delinked, then we got some changes that we'll understand in IMF, that what was the whole controversy. But as of now, it is one thing was now clear, that all international calculations will be done in dollar. In India, balance of payment is maintained by RBI. So RBI maintains this balance of payment. Calculations are done in dollar and kept under two heads, current account and the capital account. Is that clear? But before coming to these heads, that what exactly current account is, what is the capital account, we can write something what we have said so far at one place, so that you can connect the story better. And then we'll see that how in current account we got balance of trade, balance of invisible. Here we got three things in terms of investment, in terms of borrowing, in terms of what is called banking capital. So that's how we got clear heads. All the heads are being given by balance of payment manual of IMF. Is that clear? Sir, I cannot see this. All right, so, but before coming on the writing part and what are the other dimensions, let's take a small break here. On the other side of the break, we'll continue from here. All right, so, welcome you all again. If you have anything to ask from whatever we discussed. So before the break, we were talking about that what exactly this, what has been the reason, or you can say what has been the historical sketch of development of these institutions. Obviously, each of them will discuss in detail, but Bretton Woods is the root from where all these things have started, that you should know to start with. Then, as I told you, that all these guidelines of IMF, etc. Can I show it now? No. All right, not an issue. So that is how, when we talk about how the development of these things has happened. Whatever now, whenever a country is having balance of payment, like when we are having these kind of accounts and subheads into it, that all is explained by IMF only, as per the standardization. Now, before moving further, why not to write some introductory part, so that you can get better connect that what we are going to discuss in balance of payment and other dimensions into it. You can give a heading, balance of payment. Balance of payment. We are not writing this asset and liability, these kind of things, because that was for a general understanding that what the term balance actually refer to. Balance of payment. You can write that. It refers to the ledger of a country, or the balance sheet of a country. It refers to the balance sheet of a country with respect to trade and exchanges with other countries. Trade and exchanges with other countries, or with the rest of the world. That would be a better idea. With other countries or rest of the world. Rest of the world. How to maintain this balance of payment? The guidelines are drawn by IMF. How to maintain the balance of payment? The guidelines are drawn by IMF following balance of payment manual. Balance of payment manual 6. This is the number 6th edition. 6. In India, RBI maintains this balance of payment. RBI maintains this balance of payment, and following BPM, that is balance of payment manual, and following BPM, all calculations are done in dollar. All calculations are done in dollar. All calculations are done in dollar. Calculations are done in dollar. In dollar. Are done in dollar. So that's how we got now these basic thing about balance of payment. So three things you need to remember. RBI manages the balance of payment in India. Management is done in dollar. And the third, that manual, that how it should be done, what should be the way to prepare it, that comes from IMF following balance of payment manual. Now, from the next paragraph, you can give a kind of heading that the Bretton Woods Conference, it starts with B for Bombay, Bretton Woods Conference. The Bretton Woods Conference. The current scenario and the contemporary shape. The current scenarios and the contemporary shape of world economy was largely shaped by Bretton Woods Conference. After Industrial Revolution, now we are going to get the history of it. After Industrial Revolution, international trade started. What do you call it? In leads and bounces, that means manifold. International trade started, and Europeans became the biggest beneficiaries of it. Europeans became the biggest beneficiaries of it. Beneficiaries of it. As this international trade was increasing night and day, it became inevitable to get a comparative idea of their respective growth. It became inevitable to get a comparative idea of their respective growth, resource potentials, and such like. To get this analysis, it became almost necessary to have standard calculations At the same time, on the other hand, the growing importance of standard rules of trade was felt. The situation got further worsened, or graduated, whatever you want to write. The situation got further worsened with the Great Depression of 1929, followed by the Second World War. In 1940s, almost every country started looking at ways out to bring economy on track. Soon it was realized that why not to have a global conference for this purpose. Following which in 1944 this Bretton Woods conference took place. Led by Keynes from UK, John Maynard Keynes, so you can say J.M. Keynes from UK, and Dexter White from USA. Following three major points of concern were addressed and they actually later on saved the world economy. Following three major concerns were addressed. First, it was well realized and mathematically proven by Herod and Domer both of them are seasoned mathematicians, In fact, their theory, I'm not getting into that, that's not required here, but it was well-structured theory. Even today, when in 2021, when you are having a bank for financing your infrastructure, you're using the same model. Because you know that if the money is not coming, roads will not be built, and if road not will built, how will get the benefit? Proven by Harold Domer that if low-income countries are not given capital from outside, they may shrink and wither away. They may shrink and wither away. They may shrink and wither away. Wither away. This concern was solved with the introduction of World Bank. We'll understand and discuss in detail what is there in World Bank. This concern was solved with the introduction of World Bank. So when I say David Malpass is actually head of all the five. We have now five organizations into that. Next is second one. How to get standardization of calculation. How to get standardization of calculation. Standardization of calculation of national income, balance of payment, national income, balance of payment, and a support system for balance of payment. And a support system for balance of payment. Because if the balance of payment is not good, the international trade will get affected. No? Support system for balance of payment. For this purpose, IMF or International Monetary Fund was introduced. For this purpose, IMF or International Monetary Fund was introduced. We'll talk about it separately. IMF was introduced. And third, how to develop a global consensus of world trade rules. How to develop a global consensus on world trade rules to ensure that the world trade is as smooth as possible. As smooth as possible. As smooth as possible. As smooth as possible. For this purpose, when International Trade Organization was recommended, but it could not realize. But it could not realize. Instead we got General Agreement on Trade and Tariff. General Agreement on Trade and Tariff. General Agreement on Trade and Tariff. As we have written, you can mention somewhere in the box that in 1953, United Nations developed, maybe you might have heard this term earlier in GDP also. In 1953, United Nations has developed United Nations System of National Accounting, UNSNA. UNSNA, which India also follows for calculating her national income. Which India also follows for calculating her national income. Her national income. So that's how we got UNSNA. Very important term, and MOSPI takes care of it, get the statistics of it. UNSNA series we call it. And that's how we got national account statistics every year, which is in line with UNSNA. So that's how we got this whole idea that how the Bretton Woods had said three major things, and these three trinity, in a way, Tridev jinko aap bolte na, these three trinity actually has shaped the future of the world economy the way we are into in 21st century. I could see a question here. Shraddha is asking if fixed assets can be used as cash whenever required as the liquidity. Actually, I want to understand the point. What could be those things which are convertible in cash? Anything can be converted into cash, and that process is called liquidation. Fixed assets are those assets which stay with you for more than 1 year. That's the fixed asset. And anyone is growing or not should be viewed on the fixed assets. That's why we take fixed assets as a criteria. But I don't want to get into that domain that you already know about those things, so there's no point of going there. But yes, fixed asset could be anything. It could be anything which stays with you for more than 1 year. Did you know that's why old people, when they go and see that whether a fellow is rich or not, they don't see which car you drive. They look how much of land you have, how much of jewelry you have, because these are fixed assets. This, they might not be impressed by the car in the villages, but they will be surely impressed if you got tractors, if you got trucks, because that means fixed assets has been made. So fixed assets are, and if you are selling it, that can be converted into liquidity. But liquidity, when we say, is something which is available to you in form of cash. Either it is direct cash or it is something which can be converted into cash without any delay. That's how the term liquidity is used. So the definition of liquidity as per the economics is any asset which is available in form of cash or can be converted into the cash without any delay or almost no fees. That all is called, that's why in Basel 3 we talk about one thing called liquidity coverage ratio, LCR, where we say how much of high quality liquidity one is having. So liquidity is anything, anything which is either cash or can be converted into the cash without any delay or with almost no fees. Any other thing which can be converted into liquidity with the delay or with some charge or with some cost, that is called asset. That's how the term is. All right. I hope Shraddha is clear to you. All right, I'll try Shubham to dictate it at least twice. Fine. So that's how we got a general idea of Bretton Woods. Bretton Woods is the very important development, and that has shaped the the direction and the future of the world economy. That's why all the discussions of international economics always start from the Bretton Woods, no matter where you are listening to. So that's how we got. Now let's come to what is this balance of payment and what are the heads into it. So IMF says this is how you should maintain the balance of payment. In the balance of payment, we got two clear, first listen, we'll write, don't worry, each of them will write in detail. In balance of payment, we got two heads. But before that, before coming to these heads, I would like to ask you one thing. You might have heard three sectors, primary sector, secondary sector, tertiary sector, or these kind of things. How you define service? What is service? What is service sector? What is your definition of service sector? What is service? What is goods and what is service? You know, say goods and services. So what is service? How you define it? Let me see. How you define it? What is service in economics? When you say goods and services, so what exactly service means? Anyone? All right, I should be talking about spellings also. I'll take care of it. All right. Anyone? What is service? It's intangible. All right. I'm just saying it's intangible. Three sectors which assist one or two sectors. Samim. All right. The tertiary sector which helps the primary and secondary sector. Tertiary sector. That's synonymous. That's not the definition. Shubham. Yes. That's why I wanted you to know. Actually, what is service? WTO defines it. Service refer to all those things which are not visible. Which are not visible. In fact, they say, they go even simpler. Something which does not fall on your leg. You may laugh at it, but WTO had defined service as something which, producing that thing which does not fall on your leg. It is invisible. You can't see it. But yes, it helps, as Shamim is saying, the primary and secondary sector. So anything which improves your primary and secondary sector, which improves your standards of life, comes into the service. And in India, the service sector is divided into three visible categories. One is the general services. In fact, if you see economic survey, you'll get these three sectors. In the service, first is general service like transport, telecom, hospitality, hotel industry. Second is what is called professional service. In that we got real estate, in that we got financial services, in that we got other professional services. And third is public administration, defense, etc. That's how service sector gives the data. Maybe tomorrow I'll show you how that is defined. So that's how we got this service classification. So you know what is service. That does not fall on your leg. In earlier days, rather than calling it goods, we call it merchandise. Now we use better term called goods, in which we have various classifications. So keep this in mind. I had to say something, that's why I asked it first. Now you know it. So service is something which does not follow your leg. That's the reason why service sector is called footloose industry. Now this question has been asked. Everything is long. When WTO says service sector is which does not fall on your foot, or which does not fall on your leg, what surprise if it is called footloose industry. I think, was it 2000? You can see the previous question paper. The question was footloose industry referred to, and the answer will be service sector. That's how it is. So that's called footloose industry because it does not fall, your legs are free when you're dealing with that service. That's how it is called. When you carry something in the form of goods, you are engaged. When in service, when I'm talking to you, obviously legs are free, you can say that way. So that the term footloose industry is used. By the way, so current account of balance of payment is divided into two clear heads. Something what you can say balance of visible and other is balance of invisible. Balance of visible or balance of invisible. These are two clear heads in the current account. Balance of visible means the balance of trade merchandise, or you can say balance of merchandise, or you can say balance of trade, or you can say balance of visible. Balance of invisible consists of three things. One is balance of services. Second is balance of transfer in terms of, let's say, payment, any kind of interest, dividend, etc. Like if I invested, say for example, in any other country's stock market, I might get money, that is dividend, that is coming to our country, or somebody from the outside had invested in my country and that is going out. So that will be the balance, how much is coming, how much is going out. In the balance of visible, say how much of import of goods we are doing, how much of export of goods we are doing. In the balance of service, we'll see how much of import of service we are doing, how much of export of service we are doing. In balance of transfer, we'll see how much of interest or dividends coming to us and how much of interest and dividend going out of the country. And then in the, what you can say, remittances. So that's how we got three heads in balance of invisible, balance of visible. In the capital account, we got three heads. One is what you call investment. That means if any investment is done. Now investment may be done in two clear heads. One is called FDI, foreign direct investment, and other what you can call as FII, foreign institutional investments. Foreign institutional investments, or since 2008, to make it more clearer, we say now foreign portfolio investment. So FDI, FPI, or sometime FII. Within that you can say FII, or you can say it FII almost synonymously. Since 2008, to make it more clear, we say these two heads, FDI and FPI. Foreign portfolio investment, foreign direct investment. The fundamental difference between the two is direct investment is where you are coming and participating directly. You want to do the business. Like Elon Musk came to India and want to make car in India and want to sell it. He is coming in terms of doing business in India. That is FDI. Warren Buffett will never come to the Paytm to see the office, but has given only the money and say that whatever profit, give me some share of it. That you can call as FPI or FII, both the term can be utilized, FPI or FII. So when we say foreign portfolio investment or foreign institutional investment is where one is coming with, I'm giving this clarification that both the term can be used. Why? Because while reading documents you might come across. I am following what is IMF guideline is saying. So when it comes to FII, foreign institutional investment, or what is also called as foreign portfolio investment, in that you are not going there and working there. That's why remember in that bracket I told you that in FDI generally we consider when they have 10% share, 10% equity, then FDI is considered. So less than 10% we call it FII only, foreign institutional investment. So either you call it FPI or if you call it FII, whatever is. The right word is the FII, but some people are calling it FPI, so that's not wrong either. This has been clarified by the IMF itself, that the term can be used synonymously. So FII or FPI, though FII is something what your economics will see, this is where they are coming, they are giving money and asking you to do business on your own and share the profit. FDI is when they are coming and actively participating in this business. And then we have various types of it that we'll see subsequently. So we got one is called investment. Then second thing in the capital account is debt. Debt. Now the government can take debt. Let's say government of India has taken debt from outside. So that is something which is coming to us. Government can take debt, that is called sovereign debt. Sovereign debt. When the governments are taking a loan from other, now here we can have loan from various ways. There are various ways through which loan can be given. I'll tell you what is line in credit and how it is there and what are the dimensions into it. And second is what you can call as when a company is taking loan, not the government, but a company, which may be the public sector company or a private company, taking loan from other country, that is called as ECB, external commercial borrowing, or ECB. And the third thing is what you can call as banking capital. Let's say SBI is working in another country. SBI plays an important role in Singapore banking system also. So let's say SBI working there, ICICI working outside, and whatever the money coming and going, that will be kept under the banking capital. As per IMF guideline, these are the heads in which we have to say current account, capital account. Now what makes current? Current simply means something which is coming and going in form of trade and active activities. Capital, could you see here, money is coming. Watch carefully. Here the trade is being done, some kind of activity is being done, and the money is coming. That's capital account. Current, that's current account. When we say capital account, in the capital account, money is coming in various forms. So investment, debt, and banking capital. So current account and capital account, balance of payments are divided into this. Listen to me carefully. If your current account, let's say 100 rupees coming, $100 is coming rather, because everything is calculated in dollar, $100 is coming inside the country and $120 is going outside the country. We have minus $20. So we can say our current account is in deficit. That's called current account deficit, a very important indicator for any country. In India, we have current account deficit. Why? Because look at the board. Balance of invisible is negative. We have more import than export. This is negative. Balance of service is positive. This is gradually becoming negative because more investment coming, that means more interest or dividend will go outside. If these two are increasing, this will be going outside. So this is positive, this is negative, this is highly negative. Even this kind of question they have asked, that in India balance of visible is much more negative than whatever surplus we have in the balance of services. Remittances, we are positive. Despite COVID, remittances are positive in India. So we have remittances positive, this is minus, this is positive. So overall balance of invisible data is good. This is our biggest worry, what you can say balance of trade or balance of visible. And this makes our current account deficit. Current account deficit. On the contrary, if you see capital account, we get, this is important, not the total balance of payment, it is the current account which is very significant, and that's why when we look at the stability factor of any country's balance of payment, we look at the current account, that what is the current account deficit of that country. And in the capital investment, we are continuously increasing in FDI, and FII is also increasing, though there has been some setback in the recent days, but FDI is massively increasing in India. And as we got new FDI policy, in the new FDI policy, some of the heads of FII might be treated as FDI. So that's the reason why in FII we have what is called, in this foreign portfolio investment, in this we have what is called qualified foreign investments, in that we have ADR, GDR, American depository receipts, global depository receipts, convertible bonds, and so and so. Sovereign debt in India we take that money from World Bank, we take money from other sources. ECB can be done, and when ECB is done, like in India we got one famous called masala bond. Generally, whenever a company is taking loan of a country from the outside countries, it can be used certain names, like in India we call it masala bond. NTPC has come up with the green masala bond for electric vehicle charging points. For China it is called dim sum bond, for Japan it's called samurai bond, and so and so. Some representative name has been given so that you can come to know which country it belongs to. So samurai bond for Japan, for dim sum bond for I don't know what North Korea will call it if it comes with. This is your homework, think of it. What will be the name of North Korea's external commercial borrowing? What name they will give, I'm wondering. The haircut? Whatever. So banking capital is that how your banks are having foreign reserves, and that is also utilized for the purposes here and there. So that's how we got that outlay, an overview that what exactly is there. Now each of them will be requiring some more discussions, like why balance of visible is negative and what needs to be done. Like if you see in India, we have 5 biggest import. As per the latest 2021 survey, the biggest import we have is of petroleum product. First is crude oil, second is petroleum product. Crude oil means when we are taking the crude oil directly, and second is finished products of petroleum. So crude oil, petroleum product. Third is gold. This is another concern, because we are gold lover people. The hashtag Bappi Lahari. Yes, those from Bengal might say Ata Chalbe na. No, yeah, I'm talking about the Bappi Lahari. That is one, very representative of the gold. So, but in India, we import a lot of gold. Our trusted partner is Malaysia, Mauritius, Malaysia. Malaysia got a lot of gold. So if you see, third is gold. Fourth is something which is a bit surprising to us: telecom instruments. Telecom instruments. That is something which we are importing. Fifth is, if you see, that is coal, briquette. Briquette is that wooden stuff which is used for combustion process. So coal, coke and briquette. These 5 are the topmost import India have. Look at the export side. The biggest export is petroleum product, because we have good refineries like Jamnagar, etc. So we export also petroleum products. Some of the petroleum products are exported in India. Second is, surprisingly, this time, that's why Economic Survey has given a separate column, and those who are writing mains have told them, be ready for this question. Second export India is doing is drug, pharma related thing. And we are hoping that India has a potential to be. Now, I will be 0% surprised if the mains something on the pharma sector is asked. Because India is showing massive potential in the pharma, which was so far untapped. So we are having what is called a lot of things. Then we have iron steel. We are exporting iron steel. We are exporting electronic items. That's a good thing. Electronic items we are exporting, and gems and jewelry. So if you see, these 5 are the top export, top import. Our biggest trade partner as per survey is USA, but the recent news which are telling us that China got back on the position 1 again. So first is USA, second is China. All that data comes into the economic survey, and that year's data will be significant. I'm giving this year's data because the next economic survey is yet to come, but I'll show you in the economic survey that how you can get this data, where it is mentioned. Or maybe in the current affairs it will be told, but then even. So this is how we got balance of visible. In balance of invisible, balance of service, we are doing wonderful. We are doing wonderful in communication, telecommunication, software business. We are exporting a lot to the US. We are strategically significant for US for software business. Besides, if you see, we are looking into one more sector called financial sector. And a lot of rules has been changed for them. We'll understand that too. However, we are still importing a lot of things, and we can easily replace that, particularly in terms of telecom services. And then when it comes to balance of transfer, this will naturally be minus if we are increasing this. So as of now, we think it is like that transpiration which will happen, the water loss will happen. Because if we are increasing investment, this money will go out. So we are not worried about it. Otherwise, the quantum wise, it is very less. And remittances are on the positive side, though COVID had witnessed some setback into it. Investments are on the surge. We are, to that extent, so that IMF, because IMF makes all these things, has warned us that be a little slow. Your speed is something which is going a little fast on FDI. IMF had to warn us, particularly Geeta Gopinath, because she has the Kerala connections. So that's the reason why she was very concerned that India should be a little careful on the FDI inflow. In FIIs, we are having participatory notes and several other options. PNs, for the time being, we have stopped. What are they? What else is there? In the sovereign debt, yes, we are going into in the line of credit with World Bank. And please, today, what is called, in today's time, taking loan from World Bank is not bad for India. Because we are not that India of 1950s. Now, if it is coming cheaper, why not? Let's take that money and use it. That way we are thinking. ECBs, many of the companies of India are going outside for buying that money, and then banking capital. So this was the now we'll discuss in each of them little detail, but today I would like to stop it here because I think better if I do it in one go. It's a matter of discussion of say 1.5 hours so that you can get each and every intricacies. I hope you found the topic bit enjoyable. You can tell me in the comment box whether it's enjoyable to you or not. All right. So in the next class today, let's wind up here because I would like to talk about this chart once again, keeping economic survey in front of us so that on and off I can refer to that, look, this is economic survey saying this is what exactly the status of the 2021 India is. So let's wind up here today. In the next class, I'll continue from here, and then we'll move towards to understand that what are indicators of a good balance of payment situation, what about the exchange rate, why this is significant for us, what is this need and read, and then we'll understand what is World Bank and so on, so in phase manner. So this is it for today. I hope the class was productive for you. Thank you.